So in this topic, the focus will be on the production cost statement together with the notes and the break-even point and also the internal control related to this topic. But before we start with this statement with its notes, let me remind you the important things. If we want to produce something, we must or we incurred certain cost. So under the manufacturing, we have 3 costs because without those costs, no production will take place. So the first cost in the manufacturing costs is material cost. Material cost. The second one is labor cost. The third one is factory overhead cost or the manufacturing cost. So it will be easier for you to prepare the notes to the production cost statement if you do understand this terminology. Now let us start with the first one, the raw material cost. This is subdivided into 2. The direct material cost and indirect material cost. What is the difference between these two? The direct material costs are the costs that are involved directly in the production process. And we said this cost, because they are directly involved in the production cost, they are prime cost. And they are variable. They are prime cost and they are variable. Variable cost depend on the number of product produced. The more the production, the higher the cost will be. And indirect material cost. Indirect material costs are the costs that are involved indirectly in the production process, and the costs are not identifiable in the final product. For instance, we have the consumable stores. And these costs are fixed costs. They remain constant. Irrespective how many products were produced, they remain constant. Do not forget I said the direct material are variable depending on the number of products produced, but this one are the fixed cost because they remain constant irrespective how many products were produced. Because they are fixed costs, they will be classified under the factory overhead cost. Now let's move to another cost under the manufacturing, which is the labor cost. It is also subdivided into 2, the direct labor and indirect labor cost. When you talk about the direct labor cost, we said they are the salaries or wages of the employees who perform a direct work towards production. The salary of the employees who perform a direct work towards production, e.g. the operators, machine operators. Then we move to the indirect labor cost. These are indirectly involved in the production process. The salary of the indirect laborers are indirectly involved in the production. E.g., we have a factory foreman salary, salary of a cleaner, or salary of the supervisor, a factory supervisor. supervisor. And also this cost is a fixed cost. They do not change in relation to the number of product produced, they remain constant. Because they are fixed costs, they will be recorded just like the indirect material cost, they will be recorded under the factory overhead cost. The direct labor cost, it is a variable cost depending on the number of items produced, meaning that the higher the production, the more the cost will be. The last concept or cost in the manufacturing is a factory overhead. Factory overheads or manufacturing overhead cost. These costs are indirectly involved in the production process and they are fixed costs. They remain constant. They are fixed costs. If you still remember, I said at the beginning, the indirect material cost will be recorded under the factory overhead together with the indirect labor cost. So in this cost, we are going to record the indirect material cost, indirect labor cost, with other factory overhead cost. For instance, factory insurance, depreciation of the factory machines, etc. Right. Now we can start with the practical work or practical example. With me, I do have the question, the previous question paper. I think this question is familiar to you, but let's use it as a revision. Right. Manufacturing. Mahala Bags is the name of the manufacturer. You are provided with the information relating to Mahala Bags for the financial year ended 29 February 2008. It is very important to start with the information. This is a manufacturing business owned by the Mahala family. They manufacture school bags and sell this at a markup of 40% on cost. Required: prepare the production cost statement of Mahala Bags for the year together with the notes as indicated in the answer sheet. But at the moment, I don't have an answer sheet. I will use a clean sheet to prepare those notes. When you prepare the production cost statement, you must start with the notes so that it can be easier for you to prepare the face of the production cost statement. Now let's move. The information. The following balances appeared among others in the ledger on the 1st of March 2007, the beginning of the financial year. We have been provided with the opening balances in each account. Now when we start the notes, we are starting with the direct material note. Direct material. Now we have been given the opening balances, then the closing balances. Stock on hand at the end of the year. This is the information. And the transactions during the year. But before we can start this note, let's see what is needed to prepare this note. Don't forget, you have to start with the opening stock. The stock at the beginning of the financial period. Opening stock. Then you say purchases minus the returns or allowances, if any, to get the net purchases. Then any cost incurred in bringing the goods to the premises, such as the transport paid to bring the goods into the premises of the manufacturing business, which is called carriage on purchases. Do not forget, we add the opening stock, purchases, carriage on purchases, and other costs such as custom duties and import duty. We add them together with the opening stock and the purchases. Then we have the closing stock. We say less closing stock. To get the material or raw material issued for production. This is how this note looks like. Now let's go to our work again.